Rekodi inayo kwanza before ipiki na kaanga. Okay, so we are talking now of an head and shoulders. And remember, it's a reversal pattern, so we have to get it when the market is in an uptrend. And head and shoulders is a sell signal. So this is what happens. You can see the market has been giving a series of higher highs and higher lows. But now at this particular time, the market will give us a new higher high and then drop and go past the latest or the previous higher low, and then the market will now give us a new lower low, and then the market will try to come back, do a retest somewhere where we have a strong resistance level, and then from there you can see now the market will start dropping or selling massively. So now upon the retest, that's now when we are going to have the formation of a complete head and shoulders pattern. That is when now the market will completely form the head and shoulders pattern. So this is how it will be. So you are going to have a shoulder. The head is everything above that resistance zone, and now the right shoulder is when now the market comes for a consolidation or a retest after giving us a new low. Remember here the market will have to give us a new low. That is now market going below the last higher low and gives us a new lower low. Sasa, now how does these shoulders form? The shoulders can form in form of flags or in form of consolidation. You can get that the market maybe it has a bullish flag, and on the other side the market can have a bearish flag. That is how the shoulders forms.
Yes.
And now everything above the resistance zone becomes now the head. It can even be a one candlestick, and you can term it as an head. Now, once you take this trade for sales, you can hold it for long for what we call 90% rule. And the 90% rule states that the next impulsive move should cover at least 90% of the correction. So
Yes.
in this case, when the market was trading inside this channel, this now was the
The
correction, right?
correction.
So
Yes.
once the market breaks out and it now starts moving impulsively or strongly, it should cover at least 90% of that, correct?
Correction.
And the 90% is now where the correction started. So that one is going to be your overall take profit. Sasa.
Yes.
Now, how can you enter such trades? How do you enter uh, these kind of trades? Remember, these are reversal pattern. But for you to take excuse- okay, now for you to take an entry on this, you need other reversal patterns inside this one. Like in this case, let's say you are taking the first one as your entry point. You will use this one. Here you can clearly see we have a double top. We have the first top, we have the second top, and the second top is forming at the resistance trend line. So already you
Yes.
have two confirmation on that resistance trend line, double top formation. Then the market drops. After market drops, market now starts forming a possible bearish flag. When it starts forming, we say it's a possible because it has not already formed, right? So uh, the market forms a bearish flag. We expect a reversal pattern inside it, maybe a double top or a raising wedge with a double top. And then from there, we can have now our second entry, and we can now ride on those sweet sales. Now, you can have several take profits. You can see these IIs levels, these the strong ones. You can use
Mm-hmm.
them as your take profits points. You can use them as your take profits points, or you can as well use them as entry levels. Once the market breaks, you wait for a retest and then you take an entry. Market breaks, retest, take an entry, and you hold all the way to the final take profit. In most cases, head and shoulders is a good swing trade setup. You can hold it for several days. When it happens, mostly on 4 hours daily time frame. Yeah. Do you have any question regarding the head and shoulders pattern demonstration?
No, it's okay.
So we can look on the inverse head and shoulders.
Mm-hmm.
Now, the inverse head and shoulders will form when the market now is in a downtrend.
Mm-hmm.
The market will be in a downtrend, and now that is when we are going to have the formation of these inverse head and shoulders, which is a reversal pattern or a buy signal. So remember, in a downtrend, the market will be giving you a series of lower lows and lower highs.
Yes.
Lower lows, lower highs, lower lows, lower highs. And now, at a point, the market will come and go past the recent lower high. That means the market will now give you a new higher high.
Yeah, hi.
Now you wait for the market upon retest. That's now when you can take an entry. If maybe you missed on the first entry, now you can take a second entry over here, and then you can ride all the way to the 90% rule.
Yes.
And 90% rule is now where the channel began. So that is going to be your overall take profit in this case. So here you will have a strong support level. On the head and shoulders is a
There's resistance.
resistance zone. So here it's a support zone. Remember what we have just said there. You wait for the market to form other reversal patterns there before you take that trade, right?
Yes.
So um, we will have let's say that's the left shoulder. We have the head, and then we can have the right shoulder. Can have the right shoulder, and we ride on, right?
Yes.
So now this was the demonstration part of it, so we can get into the charts and try looking for those for these kinds of patterns. So, so like
Mm-hmm.
in this case, you can see the market was in this. The market was trading in this kind of an uptrend, and then the market now dropped. The market dropped and went past the recent what lower high,
No, no, no,
giving us a new lower low, right?
no. Yes.
Giving us a new lower low over here. So now, by looking above those levels, you can see we had a very strong resistance zone somewhere around here. You can clearly see that here, right?
Mm-hmm.
So now, after we have plotted or drawn that zone, if you just try and start reasoning now this pattern as an head and shoulders pattern, you can clearly see it. You can clearly see it, right?
Yes.
So we expect the market to keep,
Going downwards.
yeah. We expect the market to continue selling. We, we expect more sales on this. Coming to this, the entry here was based on, we have an order block. We'll check on order blocks later. The market tapped that order block and then started dropping. And then, um, if you look again, the market has formed a double top.
Oh, yes,
We
yeah.
have that liquidity sweep there, then the hem here. You can see, right?
Yes.
So we expect the market to keep dropping. Uh, During this double top formation here, if you go to lower time frames, you'll get we have another head and shoulders pattern. Like that gives you more confidence on why you should ride on those cells. So
Yes.
remember, this is weekly time frame. So if the market will continue dropping, this will be the overall take profit so far. Okay, for the 90% rule, you can see the market has achieved it, and the market is already past the 90% rule. So target the next, we target the next point, which is this
Yes.
zone. So you may see the market come to this, give some retracement, and then we can expect more sales as now overall the market will have formed an head and shoulders. That is now looking at it in the bigger picture, which is this one.
Mm-hmm.
Then market coming to this, even back there and coming this way. Sasa,
Yes.
yeah. So that is for head and shoulders. Let's go to maybe 4 hour time frame and try and look for another one. Mhm. 1 point. We can have an inverse head and shoulders here if I'm not wrong.
Mm-hmm.
Let me check. So initially that is what we had there. Initially we had that kind of a trend. Now, looking at the market, you will see that the market had a very strong zone here, right?
Mm-hmm.
No, no.
Yeah.
Then now coming and starting reasoning now as if you are looking for a pattern, you will see the market here did this kind of a thing, came down, gave a double bottom. Then the market went up. After breakout, we had a retest there. Then the market continued going up. I don't know if you can now clearly see the inverted head and shoulders here,
Yes. 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 Yes.
which also had a double bottom formation.
Mm-hmm.
Yeah, and also we had, but this one was not clear. We were likely to have another ones hidden here. No, no.
Mm-hmm.
And if you look on this, you can see they are making sorry, they are making some big moves,
Yes.
which are worthy swings. Like this one, let's see how many days did this one take. So let's say for this one you can see it took 2 days 8 hours.
Mm-hmm.
This move 2 days
Mm-hmm.
2 days 8 hours.
Mm-hmm.
Uh, let's look for this one. How long has this one taken? That is now from this as your entry, right?
Mm-hmm.
So let's say you took it on the upon formation of this second shoulder. It could have taken more than how many? It could have taken nine days, 1 hour. So you can see that is a worthy swing trend,
Yes.
and we expect it to continue. Ah,
Mm-hmm.
now in terms of pips as well, let's see. Let's say you took the entry there. So these are 211 pips on this.
Uh-huh.
Remember, this is Euro USD is not the same as gold, so get
Oh,
into
yes.
11 pips on this is reasonable.
Mhm.
So let's say you have a good account and you just entered the market with a standard lot size, that is one. That is going to
Mhm.
be 2,000 and
11.
$2,111, dollars, and that's a good amount in one trade.
Mhm.
On the other hand, let's see how many pips were this for
Mhm.
the buys on the inverted head and shoulders.
Mhm.
For this one did not go much. It went for 105 pips. 105 pips. Okay,
But kwa nini kwa Euro USD
ah,
we calculate nini? We always calculate pips venye tuna calculate tu kwa the other currencies.
for currencies,
Mhm.
for currencies is all the same except for Japanese yen pairs,
Mhm.
and then for gold is different.
Mhm.
For currencies, you focus on 4 decimal points.
Yeah.
For gold, you focus on one,
Mhm.
and then Japanese yen is two.
Oh.
So, like you can see what I've just plotted currently, it's a downtrend,
Mhm.
right?
Mhm.
And then, if you look well, you can see we have a very strong
A very strong. Mhm.
support zone, right?
Yes, yes, support, support.
Now, after plotting the support, if you just come and start looking at the market, you will see the market has given you an inverted head and shoulders. I don't know whether you can
Mhm.
clearly see that.
Mhm.
No, no.
Yes. Ah.
And market went up to hitting the 90%, and you can see immediately the market hits the 90% rule. You can see the market is reversing.
Yes. Ah, yeah, yeah,
Market
yeah.
hits the 90% rule here, and then
Mhm.
it grabs liquidity, gives us a double top, and then the market drops. Unaona?
Mhm.
Yeah. So it's always wise for you to take profit on the 90% rule. Again, here we have an inverted head and shoulders which is very hidden. Hapa.
Mhm.
Sometimes maybe if you cannot spot them well, you can change your chart to a line graph. Unaona the chart, while the chart is in a line graph,
Tunaonekana vizuri.
you can spot some things.
Mhm.
You can clearly see we have the first. Actually, we have a head and shoulders here.
Mhm.
Can you see that?
Yes, I can.
No, no.
Mhm.
And then we have had that long drop on it. Sawa.
Mhm.
Uh, the inverted head and shoulders follows there. You can see it here. Shoulder, head, shoulder. Sawa.
Yes.
Uh, we have another one which is very for this one is hidden one, and I hope you will see it. We have this shoulder, the head, and then the other shoulder, and then the market moves up.
Mhm.
Unaona hiyo?
Ah, naiona.
That is another one. We have a head and shoulders here. We have a shoulder, the head, and then we have the other shoulder. Can you see that one?
Yes.
On the other side, we have an inverted head and shoulders, which is somehow hidden upper. That one. We have the head, and then we have the right shoulder, and the market went up.
Mhm.
No, no. So like
Yes.
you can use the chart either in candlesticks or in line graph.
Mm-hmm.
So you might decide you will do your analysis while your chart is in a line graph. So you will just do normally the normal analysis you do.
Mm-hmm.
Unaona?
Yes.
Utafanya tu the normal analysis. Connect the edges. For this one, you might decide you will use that one and this one. Then now you can, after drawing the trend, you
Mm-hmm.
you pick your rectangle and look for where you have strong zones and then plot them. No, no.
Mm-hmm.
This one you drew it from here, but you can see how many times has the market respected it. No, no.
Mm-hmm.
In future you can see one, you can see all this. Even this buy,
Yes.
it came from the same zone
The same zone.
and it was a very long one actually. You can see.
Mm-hmm.
Yeah, so and by the way, while doing your analysis using a line graph
Mm-hmm.
is normally more accurate compared to when the chart is in candlesticks. Now, let me turn back the chart to line graph and see the analysis we have done here, how the market looks.
Mm-hmm.
You can see
Yes.
the trend lines
Mm-hmm.
where they have passed. They are good points. They have not cut through bodies. They are just cutting through the wicks, which is normal. Uh, Looking at the zone, you can clearly see. So you can decide you are going to be doing your analysis while you are on a line graph,
Oh,
and
yeah, for accuracy.
then once you are done, you can just turn back your chart to candlesticks. So
Mm-hmm.
now, just by looking, you can see here we have an inverted head and shoulders.
Mm-hmm.
Unaona, you can use that one ikiwa namna hiyo,
Mm-hmm.
of which is it did not go up long. Using this one, the right, the shoulder here aka kadogo. Shit. Let me delete and do the demonstration again. So on this we have had the left shoulder there, right? We have the
Mm-hmm.
head, and now here we use this one as the what? As the right shoulder, as the right shoulder, aka kadogo. Or we can continue
Mm-hmm.
waiting now for the market to form the bigger one,
Mm-hmm.
this one. So
Mm-hmm.
yeah, so that is it. And as you have just seen, when we have those head and shoulders and inverted head and shoulders patterns, the market moves more pips. As I've just told you, you can be using them for swing trades. More so if you spot them on these higher time frames, the 4 hour time frame like that. Here we have had our head and shoulders pattern, you can see.
Mm-hmm.
Around here we have had a very strong zone.
Mm-hmm.
So for this one, we had this. We then had the head and the entire, you can see the whole of this. The whole of that is now the left shoulder, then the market dropped.
Mm-hmm.
The whole of this. Or at first, unaona, unaona these 5 candlesticks here.
Hizo zenye umecholea rain hapa.
Hapa, these ones. Let me point them. These ones.
Oh, yes.
You could have used those ones as your right shoulder and then taken as sell.
Mm.
Unaona hizo?
Mhm.
If you go to a lower time frame, you will get that was a bearish flag, eh?
Mhm.
And from there you can see the market went down some good pips. So,
Mhm.
what? So that is it. There is nothing much now to do. We are now done with the chart patterns, and mostly, those two patterns they mostly form on gold. Eh?
Mhm.
Gold likes those patterns. God really likes those patterns, and once they form, the market will move some good pips. Like in this case, if you look well, the market formed a an inverse head and shoulders here.
Yes. Mhm.
No, no,
Mhm.
an inverse head and shoulders, which ah, which you could have used this one. Then from there, you can see how the market has gone up.
Mhm. Mhm.
None.
Yes.
Coming to this, you can see these few candlesticks here.
Mhm.
Then going up, coming down, going up, and then
Down again.
that is now an head and shoulder
Head and shoulder.
with a double top. Eh?
Mhm.
Yeah, the double top, the head has a double top there.
Mhm.
You can see. And what the market is forming is a continuation pattern, so we expect more sales very soon. We expect more sales very soon because there's a lot of liquidity here. So in the next session, we'll be talking now about liquidity
Mhm.
and then imbalances,
Mhm.
and we will be done. We will be done now with technical analysis. Eh?
Mhm.